senior markets correspondent. George, we're talking Nvidia, stock down 7.4% now, so starting to take a beating here on the back of some of this news. Do you look at this news as maybe material to the company or maybe a buying opportunity because this stock's pulled back pretty significantly?
Yeah, it has. I mean, the context of the market, I think, suggests that, obviously it's been moving down over the past couple of weeks, and it's been soft. And I think this is sort of the big rotation, or what I consider sort of a cash harvest or a cash grab, because it's easy to sell Nvidia, a lot of market cap, a lot of liquidity to raise cash. Obviously, the move from a tactical standpoint was moving into the Russell and some of the large cap value areas. I mean, if you look at Berkshire Hathaway, just to give you an example, that stock is higher today by 1%, is performing quite well. So nonetheless, I think this may be an opportunistic, pullback, but it doesn't necessarily mean the pullback is over, considering, some of the vast, rate of change declines we're seeing across the board in the semiconductors. But just a few things to point out. ASML, which is a large semiconductor manufacturer as well, they actually guided lower. They also did this last time they reported earnings, which created a pullback in the entire space. But at the same time, you've got some political things going on, which again are adding to this sell-off. First off, there's more talk about export restraints from the Biden administration, and that's been going on. But at the same time, you've got the Trump administration talking about potentially, leaning on Taiwan to cover their defense expenditures, which, of course, the United States government spends a lot of money defending Taiwan and Taiwan Semiconductor in that region of the world. So I think those three factors, the ASML guidance was weak, and you add in the political constraints, plus the already, sort of exacerbated movement we're starting to see in these names as there's been some rotation into the smaller cap areas of the equity ecosystem.
George, geopolitics entering into a trade involving the U.S. and China is never going to go away, not at least in the short to midterm. Nothing fundamental about this company has changed. Machine learning still expected to grow at about 19% a year through 2030. Nvidia and AMD are both talking about demand outstripping supply. They're probably both selling everything they can make. Like I said, nothing fundamentally has changed. So is this just something technically that you watch, wait for your time, and reinvest in this name?
I think so. I mean, I'm looking at it, even from a fundamental standpoint. Obviously, Nvidia has been an exceptional move. Going back to 2019, the stock is up over 3,000%. So, with that said, I think if you look at the financial fundamentals going forward, and right now, based upon yesterday's close, which is inclusive of the big move to the downside today, is trading around 46 times 2025's earnings. Now, if you look at the estimated EBITDA growth, the EBITDA growth is still expected to be close to 95%. Revenue growth is expected to be essentially, about 70%. So if you look at the forward multiple, it's trading at one less than 1 times, its forward earnings growth. And at the same time, you have to look at profit margins, which are absolutely exceptional for Nvidia at 57% net income margins. Now, there can be some encroachment there, and that could come from competition, some prices that may be a little bit subdued going forward. And there's all this talk about some of the other mega cap players, Googles and the Apples, now encroaching on the AI GPU technology space. I think those companies are just way too behind to cause any interference in Nvidia's. I'm going to call it a quasi-monopoly right now. AMD is starting to make inroads in the inference chip space, but they're nowhere near Nvidia's tech prowess in the GPU infrastructure. So I think this is essentially a cash grab. It doesn't necessarily mean it's over or you should just buy the dip. I think the 50-period moving average, if you look at it right now, is getting close to that, around $115. So, I'm not saying that's going to bounce off that area, but I do think, just in the context of what's happening here from a broader market standpoint, what I did notice is you're seeing value and growth. The IWM of the Russell and, let's say, Berkshire as a proxy of value had both been moving higher over the past 4 or 5 trading days. I think value will essentially win. And so we may end up seeing a rotation back out of some of the the movers in the past couple of weeks back into some of the mega cap tech names as this correction plays out.
Yeah.
The renowned American investment bank TD Cowen has recently joined the Wall Street giants who have raised their price target on Nvidia stock. TD Cowen analysts raised their price target from $140 to $165, which isn't really surprising given the company's ongoing innovation and strong demand for its products. At the time of this video, Nvidia stock is trading at almost $118, so such a price target raise means an upside of 39% for the stock. This series of raised price targets not only dispels all skepticism towards the tech giant, but also demonstrates the firm's strong confidence and bright future. We will discuss why TD Cowen made this choice and how it may affect the price of Nvidia's stock in today's video. So make sure not to miss out. However, before you do, if you'd like to stay up to date on the most recent news and updates from both Nvidia and the stock market, you can subscribe to our channel. We regularly post updates about the major shifts and market catalysts, so click the button to ensure you don't miss any of them. All right, back to today's video. AI remains worth watching segment for global investors in 2024. But how do you keep up with the AI sector and others that you may be interested in? I recommend trying Moomoo, a sponsor of today's video. Some features to discover stocks with investment potential has blown me away. You can use the industry chain to find companies throughout the entire AI sector, or use the stock screener to filter stocks according to your investment strategy. Having the option to set parameters like industry, market indicators, financial indicators, technical indicators, and more. Ultimately, discover potentially undervalued stocks and those that appear to show buy signals to help inform your strategies in an effort to capitalize on AI-related opportunities. At the same time, Moomoo is one of the cheapest trading platforms I've found. It offers zero commission on stocks, options, and ETFs. After comparisons, I've discovered the fees are among the lowest. Right now, new users who open an account using my link and make a qualified deposit can get up to 15 free stocks, enjoy a limited time 8.1% APY on idle cash for 3 months, and earn up to $300 cash reward for transferring in their portfolio. These rewards can be earned together, so don't miss out. And thanks again to Moomoo for sponsoring this portion of the video. Despite recent difficulties with its stock, TD Cowen analyst Matthew Ramsey, like many other Wall Street experts, is still bullish on Nvidia because he thinks the rapidly increasing need for data centers will drive Nvidia's stock to previously unheard of heights. As the global data center market, the market was estimated to be worth $342.06 billion in 2022 and is expected to increase to $364.50 billion in 2023 to $605.96 billion by 2031, growing at a CAGR of 6.56% over the forecast period of 2024 to 2031. This development coincided with a favorable moment for NVDA, despite the fact that its stock has increased by 165% year over year. Despite this, there are still issues surrounding the company. The TD Cowen analyst is well aware of this situation, but Ramsey is actually encouraged by the broader trend of artificial intelligence. He believes that as long as companies seek advanced processors, the demand for Nvidia's accomplished Hopper and anticipated Blackwell will continue to outpace the company's supply capacity. The stock has recently dropped by more than 2% in the last month due solely to investors' fears that cloud computing providers might slow down their purchases of Nvidia chips. The Wall Street expert believes that despite Blackwell being highly anticipated, and every tech company is scrambling to get as much of it as possible, the analyst raised his price target on Nvidia stock to $165 from $140 because he believes that the company will be able to overcome some challenges in the upcoming quarters. However, it's not all sunshine and roses, as Ramsey still believes that there are some challenges for NVDA in the upcoming quarters. Let's find out exactly what these challenges are. Hello everyone and welcome back to Investing Tutorial. Nvidia's CEO, Jensen Huang, stated that they see increasing demand for Hopper through this quarter, and that they expect the demand to keep outstripping the supply for quite some time.
Leading the NASDAQ slide today, semiconductor stocks. The chip sell-off coming amid reports the Biden administration is considering even stiffer regulations on exports of high-grade American semiconductor technology to China. And joining us now is Matt Bryson, Wedbush Securities Senior Vice President of Equity Research. Matt, it's great to see you. I actually wanted to start, Matt, on these comments that got a lot of attention that former President Trump made in this interview with Bloomberg Businessweek. Matt, I know you saw it, but he said Taiwan took our chip business from us. I mean, how stupid are we? They took all of our chip business. They're immensely wealthy. The reaction, Matt, and some of the names you cover, I know you covered Taiwan Semi. It's down, Matt, almost 8% here. What's interesting for investors to think about is, we are building out our domestic chip manufacturing in this country. We're putting a lot of money and time and effort into it. But it's such an enormous project, Matt. I mean, there are analysts who say if you're really going to do that, it's not just money. You have to think about your education policies, your immigration policies. It's enormous. For now, we are very much, and listen, you know the company, you know the space. It seems that we're still very much dependent on some of these names getting hit today, like Taiwan Semi.
Yeah, no, there's no way you can move away from Taiwan Semi anytime in the near future. When you think about iPhones, right, the core processor of every iPhone comes out of Taiwan Semi. Every AMD chip, so a lot of our server chips, a lot of our PC chips, they all come out of Taiwan Semi. Nvidia, so all their AI chips are fabbed at Taiwan Semi. You can go down the list. Qualcomm, so again, every smartphone modem, because MediaTek as well is fabbed at Taiwan Semi. And so, no, we can't live without Taiwan Semiconductor. And when you think about how much money Taiwan Semi has been spending on equipment, 30, 40 billion a year in terms of CapEx, you can't replace it even if you can duplicate their technology. And so, no, Taiwan Semi is not going anywhere anytime soon.
Matt, so given that, do you think that the sell-off that we're seeing in this group today is justified? Do you think that people should be taking these threats seriously? Or because of what you're saying, like Taiwan Semi is not going anywhere, we need them, or the U.S.-based chip makers need them, that there isn't a real threat that that any U.S. administration would let there be threats to the island?
I certainly would say that there are more likely losers, if you will, from shifts in Taiwan in U.S. policy towards China. So not necessarily commenting on ex-President Trump's remarks, but when you look at what the U.S. is doing in terms of restricting capital equipment sales into China, if they are successful, certainly that would weigh on ASML, that would weigh on some of the other capital equipment names, Tokyo Electron, and that's something to think about. Chinese policy, if those restrictions go into place, China's been far less aggressive in blocking or affecting U.S. companies. So maybe they'll take that line again, and so it's not so much of an implication. But certainly, companies that export to China, if China takes a harder stance and starts banning imports, that's something to think about. But in terms of things shifting immensely for someone like Nvidia, where China is a relatively small portion of the revenue because there's already such significant restrictions in place. Thinking about moving away from Taiwan Semi anytime in the next 2 to 3 years, I just don't think there's any real implications, right? There's no alternative to Taiwan Semi. There's no strong
to lay out the company's longer-term vision and what he calls is the start of a new industrial revolution. He also provided an update on Nvidia's Blackwell, the highly anticipated AI platform that is expected to come to market before the end of the year. He didn't really provide an update on the timeline, but Huang does have very, very high hopes.
The Blackwell architecture platform will likely be the most successful product in our history, and even for the entire computer, even of the entire computer history.
Now, Huang went on to outline the role that NVIDIA's Gen AI products are playing across different industries, from healthcare, where it's working with Johnson & Johnson, Medtronic, Amgen on gene sequencing and drug discovery, the cloud players, Meta, Microsoft, Google, among others. Huang also added that NVIDIA is taking a collaborative approach on privacy and regulation, working with state and federal agencies to address these issues.
Given the current price, NVIDIA's stock value could soar as a result of target upgrades from various institutions, bolstering confidence in the company and drawing purchases. According to TD Cowen, NVIDIA will perform better than anticipated because of things like robust product demand, innovative technologies, or advantageous market conditions. The bank is also optimistic due to NVIDIA's clearly stated strategy to dominate this market in the coming years, as demonstrated by the release of Blackwell and Rubin in 2026. Additionally, NVIDIA has recently made investments in some of the most promising AI companies in the world, including Databricks, one of the most valuable AI startups on the market, and Figure.ai, a developer of humanoid robots. There are currently more reasons to be optimistic about NVIDIA. The company's consensus long-term growth rate of 43% annually is among the highest for S&P 500 companies and multiples that of Microsoft and Apple. At that rate, NVIDIA's operating earnings per share should rise from $19 to $80 in 4 years, resulting in a long-term price-earnings ratio, let's call it, of 18. Many analysts even predict that NVIDIA's market share will reach a staggering $10 trillion in less than 6 years due to the continued robust demand for such products. As a result, NVIDIA stock looks like a great deal right now. Nonetheless, what are your thoughts on NVIDIA's stock? Is it worth buying at the moment? Please share your opinions with us in the comments below. And don't forget to share your NVDA valuation with us. Go ahead and click the next video on your screen to see what businesses like NVIDIA have been up to these past few days. I'll see you there.